Elliott, I suppose, session on the setup that we're looking at. So I'm biased to the bear side on this current structure. And I want to just highlight something that's a bit of an Elliott wave nature. First of all, just a reminder, we did notice and call this head and shoulder. You'll see it in a minute. Nice grinding rising wedge in there. And then the final shoulder here. So that was the head and shoulder with a 47.5 neckline, which is around about there. And that gave us a target literally on the 30 grand. I'm using Binance, by the way. It's common, it's popular, it's big. I've cleared the screen of those lines, but I'll just flash them quickly. You can be reminded, and we'll take this Fibbo off actually, because I'll show you when that comes on. So there's the head and shoulder, 47.5, 30k, perfectly made, and a rally. But what I want to talk about is the Elliott waves, wave of selling. Typically you get 3-wave and 5-wave structures. That is your all-time high. That is a 5-wave starting with an AB leg. That's depending on which ends up being the final high, let's just say it's there. That's a BC leg, and then typically your 3rd wave is your longest, and it's longest by 61.8% of the 1st wave. So let's just label this nicely for you. So AB, I'm no master of Elliott, by the way. But I do respect it because it does have some interesting concepts and principles of some use. Now I'm going to show you that as a E. That's the highest point. So the 2nd and 4th are the counter trend rallies. In this sense, whoops, that was your highest counter trend. Here's your counter trends. Should have done that in the blues in fat as well. So let's do the blues in fat. There you go. Main wave. So wave 1, wave 3 in blue. And then in essence, this entire flat, as they call it, sometimes an extended flat, this entire, and do it in pink, is your counter rally. But it's got a lot of volatility iterations in it. So it's 1, 2, 3, 4, 5. In essence, in the same way, this had a rising wedge, for example. It goes 1, 2, 3, 4, 5. You can see that on the smaller time, but I want to focus on the big structure. So it's 5 waves in the Elliott wave. So that means you have a final 5th wave of selling. Let's redraw that with our fat arrow. So let me just say I take it down to the 20k. So A, B, C, D, and then E becomes F. They may label it differently. As I say, I'm not a master of the labeling, so this may not be Elliott wave in terms of the labeling correct. They will typically fractalize and put sub wave counts inside this continuation pattern, which normally is, I think the phrase is an extended flat, but don't quote me. But the principle is you have 5 waves of selling, you have 2 counter rallies, which are trying to hold the strength. Now the key point is the 3rd. So we'll start, let's also number them, because I'm talking in numbers. Let's go orange, we'll go super big. So that is wave 1. Let's put it on this side, wave 1. That is wave 2. This is the largest wave, 3, typically 61.8% larger than wave 1. We will come back to that. This extended flat, 4, and your 5th and final wave. Now, one way of sizing it that I remember and have known is that wave 5 is similar to wave 1, equivalent. This is 61.8% longer. So that is an Elliott wave projection of a 5 wave correction in a bull market. That I've drawn it to 20, it could be 24. We'll see, we'll discuss a couple of options. And I'm going to give you 3 ways that we can measure. the potential scale of a correction on the sell side out of this structure. Okay, so keep that. Let's take a picture of it. Snapshots. Polaroid time. Take a Polaroid picture. Snap him. Aye, aye. We got him. Save him. We can delete that now, and we've saved that. Let's save it as wave 5. Save as wave 5. We're waiting to see how do he do. Yeah. So that's our opinion. A sell. Yes, we had a COT indicator. There it is. I've intentionally put it on there. We're not running away from it, but they can be early. They are macro investment signals. See, the COT was long there, but you probably only got on your bike round about here. It was a tad, it was pretty much on time on the short. It was pretty much on time there. A touch early on that short. You would have maybe got in on that candle, and then the short probably a couple of candles. So it can be just a little bit ahead. You can see that if it's at the start of the week, the data came in on Friday, you got the long there. It's already a touch lower than that. Touch early. And there's room for a thriller, a spiller, all the way from Manila for a final throwdown on a 5-wave Elliott. By the way, while I was in that snagget showing that, a quick reminder. So here's my problem with the long case a little bit. Finex has been pretty telling. The long guys do not do well. So I haven't put the Bitcoin chart generally on here because it does spoil the scaling a little bit. But generally, the people, when they high leverage longs retail, are not particularly accurate. We're at an all-time low on shorts down here. An all-time low. There it goes. Pop. Just off that, and that right there. And we are close to an all-time high. That top there literally marries up with that, and that you haven't been there before. The guys dropped off hugely from March, and of course Bitcoin pumped during that period. So they were again going in the wrong direction. So retail can't be trusted to be the most accurate. If there is dumb money in the house, it's retail. So for me, this is going to break down. Now, why was it difficult? One more time to snag it. I actually came for this. Our short call in 2018 that came right. We were doing theory weekend, November the 11th, and we called for a spill then. And by the 13th, it had happened. We still had our people from theory weekend still with us that had stayed an extra day or two to chat with us. It was the last physical theory weekend we ever delivered. And they watched this, and we did this live stream on YouTube. It's going down, and it went down, and Ethereum, even more so with a very tight risk reward trade that we gave on Ethereum. It was set up June till November 2018. That low occurred during June. This was almost a 5-month flattening, very low slung, volume by price, very low. In other words, you were looking through for the floor here. That's the bulk of your volume by price along the lows. This was a lean on the 6 grand level. It broke up from around 6.4, because that's, you were bouncing each time, but each time the bounce got smaller and flatter. We had a little Bitfinex narrative story there, but that was getting lower, and it was low slung, low volume by price, and a clear short called. It didn't feel so clear at the time. You know, there's always that wall of worry. It's always easier to see in retrospect, but we called short. It's on videos. It's where we're at. The problem we had or have currently, that was also a very long-term structure. It was a 12-hour chart that I'm showing you there. It's half a day. This is a 2-hour chart. So it's a smaller structure. You just can't see it, but that's 2 hours there. So what's different about this? It's symmetrical, not low slung. Oh yes, you'd gone on the previous one, you dropped 67% into that low. So that was a full bear market and it had already taken 6 months of selling. This was in 10 days, you fell from the right shoulder and about 4 weeks from the all-time high, which is the worst and most brutal corrections typically occur on bull markets, which is why we continue to call halftime oranges and say, yeah, you're having a setback just as you're going in for oranges. There's still a whole other second half to this game on the bull side. So you came in again with a bear trend, but the difference here that I'm showing in these gray lines is that the volume by price is symmetrical. It's not so much a tap on the floor, which has made it a little bit more ambiguous. But you can be symmetrical and trade to the downside, but you can also be symmetrical and be the first in a new trend. Rarely are you low slung like the previous chart, that one, and trade up, where you're continually getting compressed along the lows and all the volume is defending the 6462 level, when up top here you're at 84, but there's no volume at the 8s and the 7s. It's all down here, the low 6s and mid 6s. So if we go back to that, it was symmetrical. The momentum has turned against you. This down leg here was harder in rate of ascent or descent than this rate of ascent. So you're taking a long time grinding your way up. Our little inverted head and shoulders that we thought had a chance, when that started to die and that stop got just run by that wick there, it told you that the structures you're setting up in pattern are not holding. That's a feedback event. It's not you're wrong, it's a feedback event. Everything's a feedback event. When you're doing something that works, it's a positive feedback event. That means your understanding is correct. If you're getting stopped out, that's saying you're probably too bullish. Maybe you need to reconsider. The rising wedge occurred here. Shouldn't use arrows actually, but we do. And this is super steep volume down and super steep volume down. So you are leaning on a basing ascending grind line, and right now where you are is along this basis of low, which will start stacking more the lower end of the volume by price on what's so far been pretty symmetrical for our first impulse shown in blue, which had a snapback rally on the 30k target made. A decent rally with some strength in it, which then turned into this head and shoulder. This head and shoulder performed to the downside. The inverted couldn't. It couldn't get away, couldn't make it, it couldn't break it. So that didn't turn into a qualifying high 3, low 3 for a funnel for us. So now we're back down here. So that's what's been tricky about this one that saw me vacillate, long, short, because we had the COT indicator, which generally as a macro area is a great point to begin accumulating. Not for that minute, not for that hour, not even for that day, but it's saying this is a point where you should be accumulating on dips because you're going to be in a better state. That doesn't mean you can't still have one more sell-off. So when we're looking at the Elliott wave on this, let's drop it down back to that 2 hour. We are saying we expect this to resolve to the downside. And we think we're leaning on that lower grind line real hard. Now that number's in the way, so I'll take it off. That is a basing ascending grind line, which for this pattern under view you were respecting. You then had a stab through, you're respecting, you stab through, and you're hanging and barely holding. You're also in a falling wedge, the grey, the fat grey. Now, some of you will go, but falling wedge is bullish. Well, we talk about the 3 impulses in a wedge. Here's your, it's a relative of the HVF, 1. Rising wedge, a little one there in there, we drew it for you. Down, more down. That's your second impulse in a wedge. And then, third, just getting up to the same localized high, battling to hold it, plus you're in a squeeze. Note this orange level, 3646. That is the midpoint between where your stop is on the final high and the just-in-time triggering event. Where's your midpoint there? You're captured in this price behavior on a squeeze that you can't run that level. And you're against the basing ascending grind line. You're being squeezed here. Plus you're in this wedge that says, if you up, prove you up and break this capping descending grind line of the wedge and go out. And in that process also break the midpoint of this axis. It's not showing like it can do it. In actual fact, it's showing that it's battling to hold this basing ascending grind line, and then it's already violated it for small little skirmishes and is now currently through it. That goes into a spill. You end up with a type 3 wedge, which is one which you spill out the bottom for, rally back up to and break, which could be your break and feign. Okay, so that tells you where we are on this. If you are bullish, you need this third impulse to finish and actually to break out of this wedge to the upside and come back here. This would then mean, and there was a little left shoulder head and a rather large right shoulder, you would need that to make target, to have you feel that you're working your way to this side of the funnel and setting up for a run for the 48. I'm not feeling that as my priority, but that's what would invalidate. So a run of this level is invalidation level over there. You can see that purple, and it is 37,621. 37,621. Let's double verify for you because there's a few purple lines. 37,9 actually. My apologies. That's the one after. 37,621 is that. The previous that one. I'm going to take that one out because we don't need it. It is a key level of interest. It was from this little upside, which did have some success, but it was a small time frame and it's clustering up the jaw. Okay, so if this then lets go of that and sells, you're through your basing ascending dotted grind line in red. You will also probably spill out of the bottom of your basing descending grind line that has been the support all the way through this. I can redraw that to keep that kind of in, because these gradients, let's say up until now you've survived. That would be slight adjustments. But in the long run, it's still compression and it's still a wedge. So 3 impulses, 1 already done, 2 already done. You've crossed the wedge to the high side. It's time to break it, and the orange line, if you're a bull, it's not happening. In fact, you're falling through the compression here. Should I be redrawing that basing ascending grind line that is in dotted red? Maybe. You can adjust it a little bit, but you only have so much wiggle room before you're making it into something it no longer is. What if we try to include that low there and said it's not breaking it? Try find it a bit more space to do whatever it needs to do. Can adjust it slightly, but you can't change the narrative. This needs to break this level, to break that level, and to head towards here. 38,000, you're now back in the bull half, especially if you're heading up for the 39. Break this level and make a new low. Real problem. Traditional entry short here, midpoint there. Where's the target? And let's go back to the Elliott wave discussion in a minute. The target is, look at it, 24,000. It's 24,000 and some dollars. No need to be hyper accurate. What is this line I've put in here? It's the high point, all-time high of 2017, 2018. Because you're still in a bull market if you break to the upside and you revisit a previous high and then support on it. Okay? So the blue line, December 17's all-time high. That's how far back you've come from the 65,000. Right, let's go and finish that Elliott wave chat that we were having. I think 4 hours will serve us better, maybe 8. Let's go with 6. So, what was I showing you? I was talking, we started this around Elliott wave. Okay, so I'm going to do a different kind of Elliott wave, projections, not just a standard grid. So here's one unit. Remember, this is your A, B, and your first leg down. That's your all-time high, to just running your neckline, 46930. Our neckline was 47,500. Remember that. Now we want that absolute high point. Where's that high point? There. You see where I'm looking? Bang. Highest wick, and there were a few that were pretty close. Now we called for a 30,000 target. 30,000 run. Look at the 1.618 Elliott extension. What did I say to you? The one leg, the leg from there down to there. The third leg, so that was, let's remind you again, numbering the legs. Leg 1, that's leg A. Leg 1, it is actually AB, is how they typically name it. AB, that is C, that is leg 2, and CD is leg 3. What did I say to you? It is a 1.618 dimensional larger leg. The third leg of an Elliott wave extension is your largest and is typical of a five fingers, not four, 5-wave extension, which is why I've pivoted back to the bull side. So instead of typing 3 here, I meant to type D. And then we go, this is E. But the E is the whole flat. They will draw a small letters A or small numerals 1, 2, 3, 4 for the extension, which is what we call an inverted HVF. We think it's inverted. It could be upside, but we think it's inverted. I'm going to just name the whole thing the DE up leg. This is the highest point, although they will measure all the swings on a sub level, like little a, little b, or small Roman numerals, etc. Numbering. The numbering standards, I can't keep up with it, so I haven't done it accurately. I'm not an Elliottician. I'm giving you top level. So this is a D, this is a DE, and we are waiting for a potential F. I'm just going to throw down the letter F down here. So what does Elliott wave say? So that's the third leg, and it was absolutely spot on. Plus it confluenced, as we've already said, with the target we drew on a HVF head and shoulders, which is always using a horizontal level because price matters more. The nearest logical round number, support, 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 that was your level, support. That was your nearest logical round level, 47, 40 and 3/4, 47 and a half. Continuation here, boom, that was your right shoulder, boom. Okay, now I'm going to show you something. We're going to go grab that, click, and I'm going to do a perfect clone. Clone. Did you see that? No skullduggery, no new tricks. And I'm going to say, okay, I'm going to put that down on the low. Pop. Did you see that? That is the exact same as that went before. Note how perfectly almost it makes the 42,451. So what are we saying? The selling legs, that's 1, 3, and 5. 1, 3, potential 5. The selling legs and the buying legs, 2, the even numbers, and the extension. So I'm just going to go to the highest point, which is there, but these are all part of a sub-fractal naming standard for the extension that Elliott will count on a sub-level. But that is your high point. Note how that is very similar of scale. So I put it on the bottom there. The magnet is on. It's sucked onto the bottom. That top is virtually a perfect fit. In other words, the rally, the counter trend rally to the main impulses are identical virtually. That's another interesting, highly compliant fact compared to the 1.618 on the perfect alignment with the target. I mean perfect. I mean absolutely perfect. So I will adjust it ever so slightly there. There. Done. So let's go to our friends at Elliott and ask them to tell us, how do we measure for the fifth wave? And they will tell you. And this is credit to Elliott Wave Forecast. Go and check them out. 3 ways to get a fifth wave target projection. Sound interesting to you? Sounds interesting to me. We have HVF method. They have Elliott Wave. We love confluences. Remember, we're not in conflict with each other. We're working together. We're competing with ourselves to be better and cooperating with others and other methodologies. Let's go and have a look. So, way 1 is you measure 1 to 0 and you project a 1.618. Okay, you understand that? I throw a standard fib grid. I place the 0 at the high of the rally. I place the 1 at the low of the 3 impulse, and we allow a 1.618 projection. Understood. I will do that. Way 2 for measuring a 5 wave. Go from the very beginning. That's our all-time high Bitcoin, 64,000. That's your 47.5 neckline. That's your right shoulder rally that took you to 59, and this ended up at 30K. Then you went up to 42K. What do? You take a measure from the very beginning, all-time high, all the way down to the end of wave 3. That's our 30K. So that's 64 to 30K. That is your 55% collapse in Bitcoin. And you project down from there, not a full unit, but 61.8% of a unit. Okay, I got that. I'll do that too. Finally, wave 3. You just recognize that wave 5 may be equal in length to wave 1. Take that length and pop it on there. And there is your final target low on 3 different measures. Would you like to see me do that? Aye, Skipper. I heard you say with great enthusiasm, how low does she go? So we answer in Elliott Wave terms. So we will start with method number 1. Method number 1, a fib grid. Join me in doing it with me. So I'm going to park this one somewhere else. I was showing you an interesting observation. We can park it there. We'll come back and grab it later. We will just have the top of our all-time high in sight. We're going to grab as much open real estate because we've got a lot of annotations. It gets confusing. And we're going to go say, fine, grid. So that's not an extension, standard grid. That is your 0. That is your 100. At the 42,451, the 1.618. Watch with me again. 1.618, 100%, 0% projected down. That's your target. You see what I did there? That's your target. 2280. Okay. Now I'm going to take that fib off, but before I do it, I'm going to put a line straight through that. And I'm going to leave it in purple, and I'm going to stick 22,280 downside short. Target. Okay, we're there. That's method number 1. Let's go and do method number 2. Okay, run it all the way from all-time high to the end of wave 3, 30K, 64 to 30K, and project a 61.8 down from your rally point. This rally point, very similar to that rally point. I got it. Let me go do it. So I'm going to remove this because we're going to get cluttered in fibs. We've captured that target line at 22,280. Okay, let me just make sure I keep that number absolutely accurate. Setting 22,280. I didn't nail it. 280. Little shift there. Okay, good. Let's choose it. Now I'm going to say goodbye to that guy. We can always rejoin him. In fact, then we'll say goodbye to that guy as well. We're now going to go measure. This is with the trend-based extension tool. From there, all the way, all-time high, 1 leg, 2 leg rally, 3 leg the macro extension, which is 61.8%, as shown to you by me, of the first leg. Where to next? Lock him in first on the 30 number. I've got the magnet on. Locking him in first, run him there, project down. Now, we don't want 1.618, we just want the 61.8. Okay, let's go have a little look. 61.8. Bang. Another target. 29.07. Pretty much nailed that one on the money. Two targets over there. Look where your 19.814 is. All-time high. Show you with love. You see him. All-time high from 11th December 2017. Have a look at the high over here, this number. What is he saying? 19,798. Okay, let's get him exact. 19,798. Tell no fibs. 798. Okay, we've got it. Okay, that's method number 2. We have 2 purple lines. Okay, let's go back down to our, was it 6 hour? I think it was a 6 hour. There you go. So we've projected twice the 61.8. Remind me now, what is the third method? The third one is the simplest of them all. The AB leg is the same length as the final EF leg. Remember? A, B, BC is a counter trend, impulsive and reactional. DCD is your longest, 61.8% longer than your AB. E, F. In short, EF equals AB. You got me? Let's do it. This is almost easier to do than any of the ones before. We head over to Bitcoin. We hit the chart here. We wipe our face because we've got letters everywhere. And we say, fine, we want to project that value down from there. So we want 100% that. Let's get rid of this fella. Each time we clear the fib from before, we want to project that length. Not sure this is going to easily work. No, we can only project from a higher point down. So that would have had 4, you're looking for 1, so that is at 41. So what am I doing? I'm copying that and what am I going to do? I'm going to adjust it ever so slightly, because we want that length leg, that's our AB that came from up top here. We want that added downside to, in other words, subtracted from the value of 42 to the downside. It's quite easy to calculate. It's 46,930, by the way. You can check the maths if anyone thinks I'm up to any fancy magic tricks. It's quite simple to calculate. You take 46,930 and 64. You get the difference between them. You're going to be about 18,000 because that's 850, that's 930. The hundreds are very similar. You're about 18,000 because that ends with a 6, that ends with a 4. You're about 18,000 along. So 18,000 off 42, 20 or 42 is 22. 18 is going to be, wait for it, 24K. What does HVF method say the answer is? 24K. The downside projection of our H3 and L3 stop is 24K. Do you typically run a target to the pence on a inverted HVF? No, it's normally just run. So could it, if it's just run, meet actually one of these other two, or even bounce on the all-time high? Yes, by the time you're down there, and if it's this kind of volatility, look at this wick here. The candles are super high on the spiller, the absolute thriller, all the way from Manila, that was brought to you courtesy of this head and shoulders there. This is all wick. That low is at 36, 37,000. You have $7,000 of just wick, no body. That shows how harshly you snap back. So if we ran this target and had the harsh snapback I would expect, you could run all four of these numbers. That one, that one, that one, and that one, and then snap back, and our COT indicator could still be valid on the basis that it was saying accumulate at the macro level. You don't get your immediate reaction as when you first get your signal from the COT. But let's finish the downside projection. So I'm going to white face. We're sitting here and we're doing this, and here we go down. Whoop, whoop. I don't want another tag, thank you. I want that. So all I'm going to do is I'm going to move that so it's perfectly through the 42.51, and then we want 100% of this measurement. That downside amplitude, as you can see, it's very close to the target. It's just a bit above the neckline, and it's just through there. Why? Because this went just through our neckline. So it's just slightly bigger than this vertical downside. Why? Because it went lower than our neckline. This measures from the all-time high to the neckline. That went from the all-time high to a little bit below with a wick. It did go there, but it went lower still. So that's why from here, this point, projecting one full unit down, we get 24. And that confluences very, very closely with our inverted HVF target. So what have we shown here? We've shown by three different measures that the targeting for the fifth wave on an Elliott wave theory measurement of the next expanding fifth leg down is somewhere by three different measures, not so small, let's keep it at 2, by three different measures is either 24,50866, let's just set each number exactly, 24, get out of the way there, 24,508. So HVF method's downside projection of 24,029 is about $400 less than the least aggressive downside target by three different measures for the fifth wave in a 5-wave downward selling structure. Corrective 5-wave Elliott to the downside. Straight from our friends at Elliott Wave Forecast, who very kindly made this resource available. Check them out, as I say, respect to them. And you've now seen three different fibs extensions being used. You've seen the grid being used. You've seen twice the extension being used. And also I've illustrated that the vertical height rally from that down leg to there and the down leg point to here were virtually similar, which is a very interesting, and I haven't got time to run a separate search for scale of the counter trend moves, but I have a feeling that they often are equivalent, very close to equivalent. I have a feeling that, like that fifth leg being the same as the first leg, there is an option where they can often be of similar size. And boy, wasn't it. So actually, what we could have done, just to show you the power of technical analysis, what we could have done if we had executed brilliantly, and we never execute brilliantly. It's your nature never to execute brilliantly. We did call the head and shoulder. We did say get in stable coin. We did say 30K would be the downside target. That's what we did okay. But actually, if we'd been exceptional, we would have called this size. When we were here, we would have had a double confluence using Elliott wave theory of our head and shoulder target. We then would have called the rally, in my suspicion, to being very similar to the right shoulder rally. And then from there, we could have got short at the 42.4 and sat perfectly patiently in the extension, only to have the inverted HVF downside target cross-validate one of three measures that measures the fifth wave. And this measure is the one that the first wave is very similar to the fifth wave in length. And in actual fact, that's your fifth wave, by the way. So it's from that high point, even though this comes later, it's not as high, which is why that might not look similar. So that's fascinating. And then further to that, we taught you, courtesy of the resources made available at Elliott Wave Forecast, the other two measures which provide slightly more aggressive, and the big question that I've said, what could be a logical bounce point, all the way back to your all-time high here for a bounce. And can I point out that we absolutely played unbelievable footsie with that all-time high on the way up. I remember it perfectly because our second interim of the first cup gold nugget, many people will be wondering, what's he on about? Our second interim of the overall target, which was the 25.7, it was the only time we experienced some pullback in the first stage of our bull to the 25.7. Everything else, we were in the overperformance zone where we started to get stronger pushbacks. So this was our second interim on the first cup gold nuggets, and you got pushed back once, you got pushed back, and everyone was waiting for the all-time high. And it took almost a couple of weeks before it got done. Everyone was like over here calling, and we're going to be through the all-time high this afternoon. And didn't happen. Sold off. And we'll be through the all-time high next week, Monday. And it didn't happen. And then it happened like whatever day it was here. And then, boy, did it get peddling, and it pedaled all the way to target. But that's fascinating. And that also was the all-time high, which is a super significant support zone. But that would have been some round trip to run 65 and go all the way back down to 19,800 on Binance. Bear in mind, other exchanges may have traded more differently, slightly different values, etc., etc. So I hope that was interesting in learning of value. It reminded me of some of my rudimentary Elliott Wave knowledge, and also maybe stimulated some of you to find out more about the skill. And all of this is on the assumption, remember, that we have a fifth wave, that we are done. This typically is not classical bottoming. You come into a low here at 30,000 and you don't make marginally lower lows. That gives you the rounded bottom. Low, a deeper low, and then only just a deeper low, and then failure to make a new low, failure again to make a new low, higher still, is what gives you your cupping. This is classic continuation. However, because of our COT indicator, we probably biased a little bit long, too soon. And I still think we're going to face a fifth wave of selling, and rather than this on a shorter time frame, and remember, your best TA is done on the bigger time frames in terms of direction and scale. When you're trying to manage stop loss placement and minutia of explicit low time triggering events, you drop to the lower time frames. But I would say I would bias bear here, and I would expect this basing ascending grind line to be broken. I've dropped to a lower time frame, so now I'm not wick trimming anymore. And for this price action to fall down here and trigger down here. But we can absolutely be wrong. And I pointed out that this is a symmetrical, typical of continuation to be symmetrical, but not overtly so. Flat bottomed in a bear market, very much so. Which was the difference between our correct, and there was only one other that we knew that called short at that time, in 2018 short call in Bitcoin's history. That one. And we highlight that that's why this has been. And people go, oh, you flip-flopped. That's absolutely a sign. It's a feature of a trader of long-standing. New information, new view. The sell-off and the absence of bid here, not once but twice, is a concern. And the continuation pattern that's drawing you in deep, the rising wedge, and then another bid loss, it's a point of concern. You're hanging heavy. You're hanging at the latter stage. We're getting to the business end. We're going to have a volatile, impulsive move. The question is which direction. That's all we're discussing. There's no question about a move because this is compression. The difference between me and why HVF method, in my opinion, is superior to all people that talk of triangles is that we recognize this is a volatility compression event that will give you an extremely short managed tight risk and a highly expansive move. So to be clear, you could even get a stop over there, sub 37,907. You could be short at 36. So you could be 36 to 37.9, $2,000, and you could trade 24, 11,000, and that's 36, 12,000. 12,000 with the risk at 2,000. So that's a 1 in 6 for risk without any further optimization on lower time frames, because it's a volatility based event. It is not two competing trends, one up and one down. You can't be in the two trends in two directions at the same time. To talk about trend lines is to imply that they are trends. This is volatility based compression for either a continuation pattern or the first in a new setup in a new positive trend. Generally vote continuation. So I'm going to set aside that our COT is a macro good buy signal for accumulation because it can be early and it applies start accumulating from this point. That doesn't mean you buy at market at the moment. The data is released on Friday. That data was accumulating throughout that week. It's not point specific to when the data releases. And that's unfortunately where our indicator will pop, because that's when it gets the information. It means from then expect a really strong entry zone. You fall to 24, you fall to 20, you fall to 22, you snap back, you're back at 36, and you can go all the way back up to 55, and then we'll be setting up new structure, and that will look like a great entry on the bigger time frames for which it should be viewed, because you get COT data once a week. You're getting price information every second. This is equivalent to a weekly chart. COT data is once a week. You should look at it probably on a weekly chart. We drop it down a little bit to get the 2 day, but it should be looked at a weekly chart. You have one price for that week. What did it close for at Friday at noon, or whatever the case may be? COT data. So that's why people have been giving me heat, saying, oh, what about your COT data? We're making so much about your COT indicator, and now you want to go short. What about your COT? Why is it so great if you want to go short? Because it is a macro time frame viewing tool that points out at a point in time when it's worth accumulating. Right now we're looking a little bit shifty, in fact. Okay, let me finish that. Thanks for chatting. I hope you enjoyed it, and see you down at the 20s maybe. Mr. Flip-Flopper, it's a virtue, not an error. It's a rookie. You are virtuous. You are self-identifying as a rookie if you say to a trader you changed your opinion. That pisses me off. This is not a stick to your guns game. The stick to your guns game is a deadly game that ends in your death. The whole concept of sticking to your guns is a life and death struggle. We want to stay alive. Cut and run. Fight battles you can win. Leave the ones that are unwinnable for other morons to fight. We flip like fuck if we have to. Okay, bye for now.